Hello and welcome to today's 60 seconds update. My name is Mike Hamilton, and yesterday in the trading room at 5 to 4 UK time I was saying not in the Dow yet. Okay, long now at 2 minutes or just gone 4 o'clock UK time, and looking to see if we can dip and then run into 200, 400 plus. Okay, I was suggesting that was going to happen later in the day, and I posted that at 4:41. Okay, so that's the kind of thing we do in the trading room. Let's have a look at why I suggested that. Main reason why I suggested it is because since late March we have been pushing higher, and this is a 50-day moving average on this 4-hour chart, but the key thing was we were coming out of a breakout area down here. So we gapped up and just started pushing higher and higher and higher. Once you break out of an area like that, particularly if you've got sort of lower stochastics and you've got room for the market to move up, then the chances are that can at least get up there. Now we've got resistance at 23,920. That's an area I'm looking to start to get short should we get up there and get some sell signals. So retracement to 50% would be something like the, let's just quickly throw that fibs on. Yeah, 50% is that 23,840, 23,840. So that's possibility we could come and see that. If we see that and reject that, then we could come tumbling down again, because on the daily chart, these are 2019 lows that we're breaking up from. The daily chart suggests 23,980 as well. Okay, let me just drag that chart over. Okay, so we had this 5-wave down, 3 waves up. This line signifies the end of the 5 and 3-wave move. So all we're getting at the moment is an initial thrust to the upside after a wave pattern to the downside. So I'm looking for this to resume, but I'm looking for it to resume much higher up. Well, not much higher up, just above these levels, in fact. Alright, same for the DAX. Don't often trade the DAX these days. The volatility in the Dow is so good. I don't tend to bother with the DAX anymore. Oil I'm leaving at the moment because we've got OPEC tomorrow. We had a big push to the upside last week. I was looking at this, missed the initial thrust, so hoping for a significant drop. And demand's fallen off an edge. There's so few planes in the air, so few cars on the road. Demand's falling off the edge. So I'm looking for this to pull right back to this 23 to 25, and then start to come and attack 33, and at some stage it's going to close that gap at 42. But I want a significant pullback, and the breakup area is a possibility. That would be the first place I would look, so hence the reason why I'm cautious. Right, stocks, if you look at one key stock to look at is Boeing. Boeing's had this, well, like so many other stocks, big fall off and is trying to recover. So if this can get back, if this is a higher low signifying that the worst is over, then that could come into 190, 200 plus. Stocks I like are on the UK side. I like BT. We've now gapped up today, so if we can see 115, 120, I think that could break out. We're just coming into resistance, so I'm not in a hurry here. And further on, for the US, there's a couple of many stocks I like at the moment. I like Medtronic. This is already on the way. I think a pullback into 90 might take us into 100. Johnson & Johnson's been good. Bristol Squibb Myers. It's had a run, so you can see why the indices are popping up. With this Bristol Myers Squibb, I should say, is coming in significantly higher. So we came off 67 and already we're 57. So I would be patient and just look for pullbacks, because we're going to get them. This is not over by a long shot. So I would not chase this market. Let the market come back to you. See if you can find some support, and then get some moves out of this before we start shorting again. Because we're going to get, at some stage further down the line, we're going to start to get the data that's going to come out of what is almost a global shutdown. All right, that's all I've got for you. Thanks very much. Talk to you later.